Hello traders, Gary Wagner here. Approximately 11 a.m. in Honolulu, 5 o'clock in New York City. It is Thursday, the 21st day of June 2012, and this is the daily report for gold and silver. Today's date will be remembered for quite some time as we have these markets under extreme pressure. Dow Jones closing off about 250 points. Crude oil down about $3.30. Gold currently off $42, trading at $1565.80. The low being $1563, so we're just off the lows, down over 2.5%. The really big loser today, silver, down almost 5%, down $1.24 currently, $26.98, $26.77 the low. We have a lot to cover on today's report. This in response to what I believe to be a lack of action by the U.S. Federal Reserve in their FOMC meeting yesterday. We'll talk about all of that on today's daily report. Traders, to give you an idea what kind of mayhem we have seen in the precious metals markets today, I want to start today's program off with an extremely short-term chart. We looked at this a little bit yesterday. It is a 10-minute chart. It is cash gold. Yesterday when we talked about kind of the whipsaw action. You can see it right here. This is when the FOMC meeting came out. Concluding or following that meeting, you can see the market stabilizes just a little bit and then trades off of these markets to a low right around 1600. In fact, most of the night it traded really around 1600. You can see here it dips once just below it to 95 but comes back up. So we had this market really attempting, doing its very, very best to hold that strategic century mark. We talked about that yesterday. But you can see when this market broke, it broke hard. That's right in here. And as this market breaks, it breaks down to a series of new lows. First, market coming down here, testing around 1580. 1580 had been prior support in the area. It found a little bit of support, whether it be short covering. You got the market attempting to push back up to 1600, but that would not be the case. As you can see, about 1590. From there, it was all over because this market began to really track lower till it hit these lows just above 1664, 65, right in this area. It attempted to stabilize. Now, here's what I'm looking at, and it's very, very short term, and it's only on a 10-minute chart, but you can see this hammer that is potentially forming. The market comes down. It tests this particular area right in here. I believe that is around 1550. And you can see it came right off of that and is currently trading, as I said, just around the lows, 1664 on the day. Traders, from a very, very short-term perspective to a much longer-term perspective, we are currently looking at a weekly chart, candlestick format, and this, of course, is the cash gold market, 1564, as you can see. It's quite obvious when we take a look at this really long-term trend line that started back in 2008. To be honest, it really was my hope, it was my belief that there was a possibility that after forming these lows in this area right at around, call it 1532, 1520 to 1532, we identified what could easily be construed as at least a double bottom in the marketplace, and it seemed as though we had some support. It still could be that we have good support in this area because we're currently just at this area once again, this being the first low that we had, this being the lower of the two lows that we had right in here. Let me see if I can get those lines in straight. But as you can see, in terms of our long-term bullish trend, at least for now, we know that we have been in a correction, but that was violated on a weekly basis at least a month and a half ago. But the market had been making up ground, and it looked as though, as I talked about, that we might in fact be going back into the channel. That all was given up over the last two trading days because, as you can see, this market has had a solid down week. It is Thursday. I don't think we're going to see any kind of recovery. But I can tell you this, the market is probably going to come and test this very, very first area, 1560. We've got another area at 1520. We'll have to see if the market wants to find support, because my belief is that we are currently experiencing a financial scenario unlike anything globally we have ever experienced before. Traders, we're absolutely in new territory. We've got globally stock markets under pressure, metals under pressure. About the only thing that is prospering right now is the US dollar. Traders, we spoke about this yesterday. It was my fear, especially in the silver market, because it has an industrial element to it, with the pressure that was possible in this global equities meltdown. We could see a double exposure to silver in terms of downside pressure. We absolutely see it today, down almost 5%. We're looking at a 420-minute Henkin-Ashi chart. This Henkin-Ashi chart, of course, is of cash silver. You can see really the kind of selling that we've had over the last couple of days. When we go ahead and shrink this chart, traders who've been with me for a while know that what we looked at really was no real support till $26 per ounce. In my opinion, this market was really in nowhere land in terms of finding any kind of potential support in the area. You have this one particular bottom, but we've just breached or are at that bottom. Whether it finds some sort of support in this area, I fear not, by the way, but if it does, $27 right in this area roughly. My fear right now, or my belief I should say, is this market is probably going to come down and test $26 an ounce. That's my belief. We talked about the fact yesterday that it really is having a double set of exposures. It's the one little sister of gold, so it tends to follow in tandem, but it has the additional pressure, of course, of being an industrial metal, and that pressure is what we're witnessing today as we see this market off, as I said, almost 5%. The only thing in percentage points having this kind of loss today, and that even comes close, I should say, is the oil market, down, I believe, about 3.5% on the day. This has been Gary Wagner, wishing you, as always, good trading. Of course, we're going to stay flat in this market. We're going to see what happens when the dust settles and get a strategy together after the dust is at least on the ground. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for the weekly wrap-up. Bye-bye.